Just to start, for people who aren't familiar, what is Anchorage's role in the crypto ecosystem?
Yeah, thank you for having me. Anchorage is a regulated digital asset platform. What we do is we allow institutions to have the services and the infrastructure that they need to participate in this asset class. And when I talk about services, I'm talking about anywhere from safekeeping, custody, to trading, to lending, to borrowing, or any kind of other blockchain participation features.
How do you find the regulatory environment at the moment, Diogo? Because in Beijing, the past few years, we've seen repeated sort of crackdowns on crypto trading and concern about the strength of monetary policy going on, their grip being eroded in some way by digital currency. But in the US, are they managing to look and keep a close eye on the regulatory element of it without having to clamp down and instead managing to draw more institutional money in, for example?
Yeah, I would say so. It is not a new topic. In fact, just recently, there were OCC released interpretive letters, and they actually provided much needed clarity, regulatory clarity around what banks and national banks can and can't do with digital assets. So there's progress like that that will definitely help the industry mature. And so now we know the national banks can, for example, custody digital assets, they can provide banking services to crypto businesses, and they can also participate in certain activities related to stable currencies. So that's all really good news.
So one of the things that we've seen is a couple of companies this year actually keep some of their treasury stock, their money in Bitcoin, specifically MicroStrategy, Square, which is already sort of pretty into Bitcoin, buying $50 million worth. How much do you anticipate that being a source of institutional demand as opposed to asset managers wanting to have a sort of strategic allocation?
What we're seeing at Anchorage is we're seeing all of those be true. We're seeing investors that are looking at this asset class as a diversification in their portfolios. We're looking at, like you mentioned, publicly traded companies putting millions and hundreds of millions of dollars on their treasury balance sheet. And they say it's for capital preservation. So not wanting to have dollars on their balance sheet because of the inflationary nature of the currency. We're also seeing institutions wanting to do securitization on the blockchain. We saw several institutions launching funds that are tokenized on the blockchain. We saw SEC registered IPOs from funds. We see a lot of these different types of interest. We're also seeing a lot of interest from CBDCs, the central bank digital currencies, private companies wanting to issue their own stable currencies. It really is not just one thing or one type of institution. Maybe 3 years ago, it was a lot more venture capital firms or crypto funds that were interested in coming to the space. But now we're seeing all types of different types of institutions really seeing the value all in their own way.
To what extent? Because Paul Tudor Jones sort of opened up what many felt would be a wave of new money coming in, talking about putting 1% or so of the wealth into things like crypto. Do we see more Paul Tudor Jones? Do we see more that extent of asset allocation yet? What more needs to be built to draw that sort of level of comfort in?
I would make the argument that institutions are already here. I do hear this narrative that institutions are coming. If you think about it, the types of companies that are surrounding initiatives like Libra, you saw Visa publicly show their roadmap and how interested they are in going deeply and investing deeply in this asset class. You saw announcements by MasterCard. You saw Square, MicroStrategy. You saw all of these other types of companies coming in with their own plays, including the Chinese government claiming they're going to do their own digital currency. And so all the institutions are already here. This narrative that they're coming and that something needs to be there for them to come is no longer true. And in fact, Anchorage has been part of that. For the past 3 years, we have provided a qualified custodian. Custody of digital assets is something that is very hard to do. And it was nowhere near done 3 years ago, but now there's really good solutions on the market. There were problems around liquidity that have been solved in the meantime. There were problems around regulatory clarity. They've been solved in the meantime, or at least more clarity has been given. And so really there's no one barrier that is standing in the way. And every single new announcement, like the OCC interpretive guidelines, or any new company, or any new large known player coming into the market is going to help us push a little bit further.
So obviously the fundamental, or one of the fundamental problems with holding Bitcoin or any cryptocurrency is that If you lose your string of numbers, if you lose your wallet, if you lose your USB card, you just lose it all. And you could outsource it to a third-party company, but they could get hacked or they could lose things, and it's happened numerous times, exchange hacks, et cetera. How do you make the case to others that the solution you have solves a problem in a way that other custodial solutions or that other sort of hacked-together systems for storing crypto is safer and compliant and easier?
It's a very simple sell. Anchorage was created for the sole purpose of allowing investors to safely invest in this asset class. From the beginning, our background is in cryptography, security. So these kinds of digital assets, as you mentioned, are very hard to protect. From the beginning, our solution was focused on eliminating the human risk, the potential collusion elements, potential loss. And we have seen a lot of issues on exchanges, and that is natural. It is natural that there's so many exchanges out there that some of them that build their own custody solutions are bound to make mistakes. But as you mentioned, it is such a hard thing to do on your own. And this is why we see a lot of clients coming to Anchorage to want to have one institution that has built technology that protects them against this loss, that is insured, that doesn't have any single points of failure. No single human can withdraw assets out of the Anchorage platform and steal funds for their organization. All of these elements are elements that you need to think about: business continuity, insurance, regulation, security. And we have built a very sophisticated platform that has billions of dollars in assets under custody and that provides the services to hundreds of clients.
Yeah, and it's a pretty competitive space as well, plenty of custodians being born. I'm interested in what you said previously, Diogo, because you mentioned that Visa and MasterCard coming out in support of, say, the Libra Association. I know that Anchorage is part of the Libra Association, so too is one of the VC that backs you, Andreessen Horowitz. But they've pulled out. Visa pulled out, MasterCard pulled out, eBay, Stripe. How much of a knock was it, though, to the ongoing growth, therefore?
I would say that Libra is in a very healthy state. The backers of Libra are still in our major companies, and they have the influence that we need this to have. And in particular, what we need in this space is user adoption. Players like Facebook have the ability of changing dramatically the adoption of this asset class. So do players like Shopify that have joined the Libra Association in the meantime. The quality of the software that is being built is world-class on Libra. And it's not just projects like Libra, there are projects like Cello that are attempting to do the same, coming from a very different place. So I would say that Visa showing their interest in this space, regardless or not of being part of the Libra Association, just really demonstrates that the large players are here to stay. Visa is also one of our investors, for full disclosure, and so we're very familiar with what they're doing, and we're very excited to collaborate with them in this space.